JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 16th of February 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which you can find here if you click on the research tab, and it'll take you to our page, which we update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, just what I showed you right now. Now then guys, jumping into the charts, the first one I want to pick up here is Nikkei 225. Now, looking at this picture here, I mean, we can see that the index continues to rally, and we managed to reach my target, the one that I was talking about yesterday, the 30,297 mark. And just a quick reminder of what that level is, or was in the past. That basically is the lowest point of July of 1990, guys. So basically, in other words, we're right now knocking on the doors of the levels of last time we seen in 1990. So of course, given the strong up move here, don't get me wrong, at some point we will have ourselves a nice little correction. However, at the moment we're not really getting that signal yet for that possible correction. So also what you could do here is keep your eyes on the next potential target, and the next potential target is the highest point of August of 1990, and that's roughly around the 31,371 zone. So if we jump back into a daily chart, we'll see that there's quite a bit of, I mean, a decent room here until we could reach that area. So that's why what I'm going to do right now here is I'm going to be very careful. We know that the US future markets are also hitting their all-time highs right now. So the US markets are opening today. China is still closed, if I'm not mistaken. Let me just quickly, yes, China is closed. Hong Kong is open, so I'll jump into Hang Seng in a bit. But coming back to this, basically be very careful right now. Again, looking at this, for example, picture on Nikkei, the if we suddenly see a drop back below the 30,297 territory right here, now yep, we will maybe go for that little correction here to the downside, and then we'll consider maybe a possible test of this this short-term upside support line drawn from the low of the 30th of October, and then we'll take it from there. But again, long story short, basically if you want to look at some lower areas, well, preferably maybe wait for at least a drop below that 30,297, which is the lowest point of July of 1990, and then we could consider maybe yep, like I said, a larger correction to the downside. But at the moment I would probably stay a bit careful here. Of course, as you know, the market is still, the sentiment in the market is still kind of on the positive side, and we do have that risk on environment right now. However, the raising slightly, or should I say, slightly rising concern of the US-China relations again, and there were some reports coming out that China is willing to kind of block the its exports, or should I say stop its exports, or limit I would say even its exports to United States of certain minerals that are heavily used in the U.S. military. So yep, let's see how that's gonna develop. But yeah, again, for now, the market is in risk-on environment. However, these little kind of news headlines are starting to show up, so that's why be very careful. I'm not saying that you need to go short right now, guys, but just like I said, wait for be careful and wait for the potential that potential signal. Now, jumping into Hong Kong's Hang Seng Index, I mean this one is on fire and still kind of. It seems that this could continue pushing further north, especially if it continues to trade above this 30,191 zone. Now, if it does that, then yes, even if it retraces a little bit to the downside here, still, guys, I mean, still we could see something like this, a curved move here back to the upside, and yep, we would take it from there basically. For now, it is how it is. We are looking very positive here, but again, if suddenly something starts to show up and something negative in the market starts to show up, then yes, keep your eyes on this one. And yep, we might see maybe a bit of a corrective move lower. Jumping into German DAX. Now here the index is very interesting as well. Let me just quickly have a look at what's happening with the cash index right now. And yep, we can see that the price is currently balancing around the 14,127 zone, which is basically above yesterday's close. So yesterday we failed to go for another all-time high. We even failed to move towards, or should I say, move above the highest point of January, near the 14,131 zone, and yep, it kind of remained here below this hurdle, below that all-time high. So still, these two levels are the ones to watch for today. If we get a clearance here of the 14,131 zone, then yes, my next target is the current all-time high near the 14,169. And if that gets broken, well, guess what? I mean, this confirms a forthcoming higher high, and more buyers could join in. So, yep, let's see how that's going to play out. But for now, everything's looking quite positive as well. But as I said, remain careful. DXY. DXY is well, it's a bit of a mess, I would say. So it's still kind of trading below this downside line, but only fractionally below that downside line. So in a way, I mean, it's still kind of, we are still leaning a little bit more towards the downside if this downside line continues to provide resistance. But as I said before, I would prefer to see it drop below the 90.25 zone right here in order to aim for some lower areas. This way, the index will confirm a forthcoming lower low, and yep, further declines could be possible. But at the moment, as you can see, that's the little kind of messy situation that we're having here. It's kind of leading towards that I will have to actually get rid of this downside line. I'll keep it for now. But yeah, let's see if we can actually get that move lower here. If instead it reverses sharply back up here, still, as I said before, my preferred level for the upside is this 91.24 zone. So yep, let's keep an eye on that one. There is a bit of data coming out, by the way. I forgot to mention that there is a bit of data coming out from Europe today. So we have the German ZEV economic sentiment. That's expected to have declined a little bit, so let's see where it's going to come out. Also, we have the Eurozone preliminary GDP figures. Those are expected to be the same as previous. So the Q-on-Q one for Q4 is expected to show up at minus 0.7, and the year-on-year one is expected to show up at minus 5.1. So this, of course, I'll jump into the EURUSD later on, and we'll see what we can kind of squeeze from that information, what we can squeeze on the EURUSD. But coming back to the instruments here on top, silver, for example, yesterday I've mentioned this one. If you remember, in my Traders Tea Time, I said that if we get a break above this hurdle, above this 27.92 zone, then yes, I'll aim for some higher levels. But as you can see, we're not really kind of getting that right now, so that's why probably I'll take a bit of a careful approach here, and I'll wait for a break above this hurdle before kind of targeting some higher levels, or at least slightly higher levels. Because if we get a break and we get in that daily candle staying above this 27.92, then yes, I will aim for that highest point of August of 2020, and then we'll take it from there, guys. Jumping into WTI oil, so this one is an interesting one. It kind of slowed down. The upside momentum has slowed down, and we can see also by our oscillators, we're kind of at our peaks here, our tops. So basically, yep, it's showing topping. The commodity, as you can see, managed to reach this 60.63 territory I spoke about yesterday. That's the low of the 31st of December of 2019. It managed to reach that area, broke it, but failed to stay above it, and instead kind of started drifting back down. Today it's kind of holding around here. It's kind of flat, I would say, for today, but it will be interesting to see if we get a sudden move, maybe back below this 59.61 territory, somewhere around here. And if we do get drop below this, then yes, I will go for that a larger correction to the downside. Ethereum. So I'm still sticking to this idea, although I mean it's to be honest, it's a very tricky. The idea I'm keeping an eye on here is, of course, this potential correction to the downside before another possible leg of buying. Now, yesterday we saw that strong move lower, and it seemed like that maybe will actually continue falling, but as you can see, we had a strong recovery here. Today the crypto is in positive territory. However, we are still trading below this that psychological 1800 level. So it seems like that the 1800 is kind of it's kind of, or should I say, the crypto is kind of oscillating around that 1800 level. So long story short, basically for now, I'm going to be very careful, and I'm going to still stick to the idea of maybe seeing a bit of a larger correction here to the downside, and then maybe a pop higher. But again, for now, it is how it is, guys. If by any chance this doesn't move this way, instead it pushes above the 1873 territory, which is the all-time high, then of course, yes, higher levels could be met. We could go for well, we'll be placed in the into the uncharted territory, and well, basically the sky's the limit for this crypto then. Jumping into a few pairs, so AUD/CHF. Now, I talked about AUD/CHF, and basically the what I was saying to you guys, that if yesterday, by the way, in my Traders Tea Time, that if the pair struggles to, let's say, to stay above this 0.6935 territory marked by the high of the 8th of February, now that's where it could become very interesting for the sellers, maybe, because if it struggles to do that, then maybe we'll get a bit of a corrective move here lower. However, for now, I mean, it does that. I mean, you can see that it's trying to kind of, or should I say, it tried already this morning to push above this hurdle, but failed to do that, and drifted back down. So of course, the day in Europe here has just started, but let's see if we can get that little correction here back towards this upside line drawn from the low of the 20th of October. If it doesn't happen, if the correction doesn't happen, then instead, I mean, if it starts pushing back above this 0.6935 territory, of course, we'll go for those higher levels, maybe even targeting yesterday's high near the 0.6981 zone. But again, let's not rush into anything yet. First, let's see how this pair is going to trade today in relation to this 0.6935 territory. If it struggles to overcome it, a bit of a corrective move here lower could be possible. USD CHF. So again, uncertainty here with the dollar. As you remember, just above here I spoke about DXY, and also similar story. We're waiting for that clear drop below this 0.8890 territory. I talked about this yesterday, and yes, we did get a break today, but as you can see, the bulls managed to lift the rate back above it, so that kind of raises a few concerns again. So if you want to aim for lower areas, wait for much clearer kind of break here, and ideally, of course, I would prefer to see that daily candle staying below this area in order to get a little bit more excited with further declines. And yeah, for now, like I said, it is how it is, guys. I mean, I don't want to rush into anything yet here, but although I'm leaning a little bit more towards the downside, that confirmation break here again is needed. For the upside, I'm looking at the 0.8983 territory. Now, GBPUSD. So this one is it seems like it's unstoppable. I mean, it continues to rally here, trading above this upside line drawn from the low of the 23rd of September of last year, of course. So since then, kind of, yeah, we did get these slides, but every single time it kind of tested this this upside line. To be honest, at some point, of course, we will get that correction lower, but yeah, we need that confirmation drop first. So for the downside, what you could look at here is, for example, for today, is keep your eyes on the current lowest point of today near the 1.39 zone. So a drop below the 1.39 territory could maybe lead towards a bit of a corrective move here lower, and then maybe towards this 21-day EMA, which, as you can see, kind of continues to provide decent support, and then we would take it from there. For now, I mean, yes, we will continue targeting the upside if the rate continues to trade above the 1.39 zone. If it doesn't, as I said, yes, if it breaks here back below this, then yes, a bit of a corrective move here lower could be possible. But if it continues to trade above this, now the next target here for you guys, let me just go back into history, and well, the next target is not far from where actually the rate has already been today, and it's this one right here, the inside swing low of the 15th of April and 2018, and that's the 1.3966 territory. So you can see that yes, we are not far from that area. We've already been not far from that area, but yeah, let's see if we can reach that again today. But most likely we could if the rate remains above the 1.39 territory. And finally, EURUSD. So with the European data today, guys, I mean, because the expectations are as previous, and the previous were quite in the negative territory, I would say, for the preliminary GDP figures, Eurozone. If suddenly the numbers come out slightly on the better, or should I say, on much better side, well, we could see maybe EURUSD exploding here to the upside, because again, the technical picture still remains the same. I'm still kind of cautiously bullish on this one, because I need that break. I need that break above this 1.2156 territory. If we get that break, yes, higher levels could be met. But if we're still going to struggle with this hurdle, well, I mean, it's kind of, it is, well, we'll just have to wait and see basically here, because even with the downside, for us to consider, for example, the downside, well, I would need to see maybe somewhere a drop below this 1.2059 territory. I spoke about this level before, so just to be a little bit more on the safe side, I would prefer to wait for a drop below this hurdle before targeting some lower areas. I can get rid of this downside line, no longer needed, but now I'm mainly focusing on this 1.2156 territory. So guys, that's it for this session. I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, guys. I really do. So thank you very much for joining in. If you want to catch my video later on, my traders tea time today, 13:30 GMT. For now, guys, have a wonderful, wonderful trading day. Stay safe, and thank you very much for the likes, by the way. So have a wonderful day, guys. Thank you very much, and bye-bye.